Welcome back to Investment Blueprint, the show that helps you build your passive portfolio one step at a time. In our previous episodes, we learned about the importance of passive investing, the role of different products, and the benefits of diversification. Today, we explore how one can take tactical bets using passive funds. But before we get started, let us welcome Mr. Pratik Oswal, the head of passive funds at Motilal Oswal Asset Management Company. Pratik, very happy to have you here again. While we've spoken a lot about how one should get to know about themselves before starting to invest, how to look at goals, asset allocation, your eventual outcome, and we've also looked at a couple of products now, spreading across Nifty 500, commodity and debt. I wanted to understand that while we're looking at diversification, how is it that some sectors and some things are performing better than the other things and whatnot? I just wanted to understand why is it that everybody is not growing at the same pace when it comes to different sectors and products?
Yeah, absolutely. So, I think in equity funds,
Yes.
at least most equity funds, you are getting a combination of different sectors and industries
Yeah.
in one single fund.
Yes.
So the benefit of that is that, what we've seen is that just like asset classes that we spoke about in the previous episode, where certain asset classes do well in certain time periods,
Yeah.
the same goes for sectors.
Okay.
So as you know, the economy is not stable. There are good years and there are bad years.
Yes.
In good years, there are certain sectors that perform. In bad years, there are certain sectors that perform.
Okay.
And I think by having an equity fund that invests in broad-based all sectors,
Yeah.
shows that when you have a combination of sectors,
Yeah.
the bad tends to cancel out the good and
Yeah.
vice versa. So you basically end up with a very stable portfolio
Okay.
that tends to do relatively better in either bull or bear market.
Okay.
So I'll give you an example. For example, in expansionary sort of a scenario where
Yeah.
there's a huge bull market,
Yes.
you have sectors like commodities, sectors like industrials,
Yeah.
manufacturing, and also I think sectors like
Would IT be a part of it?
no. I think in expansionary phase, I would say these sectors did do very well.
Okay.
Whereas in times when I think even IT would be a part of it because a lot of companies would increase their IT budgets,
Yes.
and hence they would sort of do well. Whereas when markets are not doing well, you have the companies that are non-cyclical,
Yes.
the companies that are healthcare stocks. So healthcare will do well regardless.
Yes.
If a consumer stock, if you're buying toothpaste or
Yes.
I think
Something that
shampoo,
you don't stop spending on.
those tend to be very stable sort of
Yes.
stocks.
Yes.
So if you have a combination of different sort of in one fund, then obviously you're diversified.
Yeah.
But what it also does is that because of these sectors and industries, through passive funds, you can also play their growth strategies separately. So we talked about passive funds under equities,
Yeah.
which is like a Nifty 500. We talked about passive funds under fixed income,
Yes.
debt. We talked about passive funds in gold and silver.
Yes.
But you also have thematic and sector passive funds.
Okay.
Passive funds that let you play a certain sector or a theme.
Okay.
So today there are passive funds where you can buy only banks.
Okay.
There are passive funds where you can buy only private banks.
Yes.
There are passive funds where you can only buy public banks.
Yeah.
There are passive funds where you can only buy, say, pharmaceutical or healthcare.
Okay.
So, so a lot of investors want to take tactical bets.
Yeah.
They want to say that, boss, I want to invest in this sector.
Yes.
And I think passive funds allow you to
Okay.
make those bets in specific sectors, which is why I think this could also be a good area of interest to a lot of
Yes.
investors who are looking at, say, making a bet, or if they are overly ambitious
Yeah.
on one or to play the growth of one particular sector.
Okay. So would you say that tactical bets for a specific duration will outperform the other regular funds that we have out there?
Yeah. So I as an AMC,
Yeah.
we don't necessarily believe that tactical bets, I think would be fruitful over the long run.
Okay.
In fact, history says that more money is lost
Okay.
than gained in thematic and sector funds,
Okay.
because people tend to come when the past performance is the best, and that's when the sector or theme is
Yeah.
overvalued.
Yes.
So I think overall it's basically very risky.
Okay.
Even the risk or a standard deviation,
Okay.
if we said the risk of a Nifty 500, the risk of a sector fund is much higher than a Nifty 500 fund also.
Okay.
So risk is higher, volatility is higher. So it's basically a lot of investors who are looking at making short-term bets.
Yeah.
So I would say for a person to look at sector or themes or industries,
Yeah.
they should look at it as a small part of their portfolio, not a very large part.
Okay.
And who are extremely convinced about making that bet in that particular sector. So I think that is some of the things that someone should keep in mind when they're choosing a passive funds that is tracking a certain theme or sector.
Okay, so theme sector, depending on what timeline you are in and what's happening in the market, you can choose to be a part of it for some time, but not as long as people stay invested in Nifty 500.
Yeah, so some people might want to take a bet on technologies, and that technology has done really well in the last few years. It has increasing demand. There is a lot of demand for digital, automation, and I think digital transformation across industries. So that could be a good bet to make over the long run. Then some people would also say that the renewable energy theme can make sense because
India's moving along that path.
Yeah, India's moving along the path, and also over the long run, we need to be self-dependent on
creating energy in many ways.
Yeah, so I think there are unlimited number of themes that you can invest in. You could also invest in there are funds in the US where you can invest in only companies that are manufacturing semiconductors. And there are indexes. There are thousands and thousands of
you can
indexes.
dive as deep as you want to.
Yeah, you can basically, we have a fund that invests in financials that are not banks. So non-banks financials, index of that. So I think the beauty about the passive fund is that you can really create unlimited amount of investment vehicles that can play in a certain theme. So for example, ESG is a big theme. Where you can, you have index funds, ETFs that are playing on that theme. So if you're bullish on ESG as a concept, then you can buy them. So I think outside the traditional, investors can also look at passive funds to explore themes that they otherwise would not have had if they are bullish on, and they can bet on those.
So fundamentally, you can make an index comprising of things that you wish or think will work better, and then you can term it something, and then you can put it out when it comes to passive. Would you consider, considering you've also said that on a long-term basis it's risky, and would you consider telling everyone to have some tactical bets in place, or would you say no, some people should ignore it completely, or would you recommend everybody to have some of it at least?
No, I would say most investors should avoid it. I think tactical bets need timing, and we've established that market timing is tough for investors to do. So I would say if an investor wants to take a tactical bet, they should probably take a smaller exposure of their portfolio, say 5% or 10% towards a certain sector size. I think make that call. So we believe that market timing is tough. If you're looking to say buy into theme or a sector, we would advise to look at it from a long-term standpoint. So I think that is the best way of playing a sector is to give it those 5, 7, 10 years. I think tactical bets are also perfectly valid if you're confident. But historically, what we've seen is that investors generally don't do well in terms of performance in tactical bets.
If I were to understand everything through structures fundamentally, how many ways can I divide these kind of funds? So one, you've already spoken about sectoral funds, the fact that you can go into, then we spoke about something like ESG, which comes into thematic funds. Are there more such layers which are out there when it comes to, differentiating one fund over the other?
Yeah, so I think in terms of passive funds, there are different, I would say, let's look at it. So you have passive funds that are, as I said, have different asset classes. Then within equities, let's talk about equities because that's when the maximum concentration is. You have basis of size. So you can basically have a passive fund that tracks a mid-cap index. You have a passive fund that tracks a small-cap index. You have a passive fund that tracks a micro-cap index also. So you can basically pay different capitalizations. And historically, what we've seen is that smaller companies tend to outperform larger companies. So, but obviously at higher risk. So one is obviously you can invest
over a long period of time.
Over a long time period, So I think you could look at size-based funds. You can look at sector funds, as I said. You have banking, financials, healthcare, pharmaceuticals, all that. So all that comes under sectoral. You also have theme-based. So you have ESG as theme. You have, say, you have blockchain themes. You
green
have
energy.
Infrastructure, green energy, consumer. So you have thematic funds also that customers could look at investing. So I think there's many ways in which passive funds or can be sort of adopted by a lot of investors.
Yeah.
So I think options are relentless. I think investors can look at these funds, but
Okay.
as I said, I think thematic funds offer very high return, but also come with higher risk. So investors will have to keep that in mind.
Makes sense. This is a personal question coming out. What are the tactical bets you're interested in as Pratik yourself? Like, are there any tactical bets that you're saying, okay, I feel something like this?
Yeah, so I mean, I don't have any tactical bets, unfortunately.
Okay.
I keep my portfolio very simple and diversified. I mean, I don't take tactical bets, but what I do is I make small investments in asset classes
Okay.
which are new,
Okay.
just to learn about them, which I wouldn't advise. This is
Yeah.
because I'm an industry professional, so
Yeah.
it requires me to learn. So small bets in, say, in the crypto space, or
Okay.
in the REIT space,
Yes.
or even in something like wine or something.
Yes.
So the idea is, for as a professional, I need to learn new things.
Yeah.
But 95% of my portfolio is like, it's very, very simple.
So that small is it? Like when you could.
Maybe less than 1%.
Okay.
Yeah.
Okay. So thank you very much for letting us know a little bit about how you go about investing as well. And I'm sure very difficult topics today we covered. Like in this episode itself, I think we've spoken about 10 or 12 types of funds in itself, right? Ranging from the size of the fund to sectoral to thematic. I think there's too much overload that we've had in
Yeah.
terms of content, and you did a wonderful job explaining it as simply as you did. I also wanted to ask you to give a task for this episode where we could ask people to figure out their own tactical bets in one way or the other. So what would you recommend if a very small bet has to be taken? Then how should one go about taking that bet?
Yeah, so I would say that I mean, the whole point about tactical bets is to invest in bets that would outperform the Nifty 500, right?
Yeah.
Because otherwise you will just invest in Nifty 500. So
Yes.
you can identify the top three. So as viewers, you can identify the top three tactical bets for yourself. Comment in the section why they will do better than an index like a Nifty 500.
Yeah.
And considering each individual goal, risk appetite, and asset allocation are different, tell us why it makes sense for you.
Yeah, that'll make more sense because every individual is different, and why
Yeah.
I invest into something may not be the reason somebody else invests in.
Yeah.
So that's crazy. In each episode, we remind people that you have to diligently do these tasks so that you end up building a portfolio yourself, or at least understanding who you are as an investor persona, and take shots on your long-term investment journey. I would also recommend everyone to watch the previous episodes if you haven't watched it yet, and also recommend your friends, family, and anybody who's interested in growing their investments through equity and passive instruments to watch this show for sure. With that, we end our 6th episode. Looking forward to see you in our episode number 7. Thank you very much for your time.